notifications so that we have this for everyone else who isn't able to attend today. So today we're going to go through some introductions of our team, a little bit of background, what community wealth building and what shared equity support means to us here at the city, then some details about this RFP, and a lot of time for questions. So for those of you who aren't familiar with the Department of Housing, our mission is to expand access, choice for residents, protect their right to quality homes that are affordable, safe, and healthy. These are the values that underlie all of the work that we do, and we think this RFP is a really big step forward in supporting different models of homeownership here in the city of Chicago. The two folks here who you may be familiar with or may have worked with on this work are Irma Morales and myself, Steph O'Connor. Irma, do you want to come and say hi off video? You don't have to, but I know you're here, just labeled as me.
Yes. Good afternoon, everyone, and welcome.
Great. This is the folks who, if you have any questions, we'll be here to answer them. But we are supported through an entire team here at the city on a broader group of folks who do community wealth building. So I know a lot of you may know NECA in the mayor's office, have been led here by this work. They have supported this ecosystem, this community wealth building from a very big picture, which is an approach to economic development that promotes local, democratic, shared ownership and control of community assets. So I'm going to start big picture and then get specific about this RFP, because I think it will help us have a shared understanding of what we're doing and why we're doing it. So the Department of Housing works very closely with the mayor's office on this community-wide wealth building. So under that bucket, there are some different ways of doing community wealth building. Business ownership, like a worker cooperative, home ownership through something like a limited equity housing cooperative, community land trusts for land stewardship, and then community investment vehicles. This RFP is going to focus on those two center pillars. So shared equity models of home ownership are what is being supported. A lot of the work so far in the city of Chicago has been on this broader ecosystem, but here the Department of Housing is narrowing the focus to what we do best, which is housing and home ownership. And this is where this RFP is situated. So to kind of just, if you're attending this call, you likely know all of this, but we're going to do a bit of an introduction just to make sure we're all on the same page. What we're trying to solve for these models of homeownership is the continued inequity in homeownership attainment due to lack of capital for down payment, lack of access to credit, certain regulatory burdens, and continued housing discrimination. We know that shared equity models of homeownership, like cooperatives, land trusts, offer pathways to this homeownership that are community controlled and that mitigate market rate increases and allow stability. We are, through this RFP, using $3.5 million in Chicago Recovery Plan funds allocated to supporting these models of homeownership. These recovery plan funds also have supported most of the community wealth building work. These are bond proceeds, so they support infrastructure in our city for long-term wealth building and homeownership. This RFP grew out of both a focus group back in January, some of you attended that, and a continued limited equity working group that the community, and there's some folks here from that wealth building ecosystem who have supported this entire movement and support on the city's end to identify some primary needs: funds for acquisition of units, funds for home buyers to ensure that these units of housing are affordable and stay affordable, and then the flexibility and ability to get those funds to a closing table in a timely manner. This is where we started, and this is where we ended as this program is designed. You will find a lot of details in the RFP that kind of go into all of these, but from a big picture perspective, there are two tracks: one for purchase price assistance and one for acquisition support. If you're familiar with purchase price assistance in the traditional homeownership realm, this is similar. It is supporting buyers. In a bit of a technical sense, these may be share buyers rather than home buyers, or the way that we traditionally use that. But it's available to homeowners purchasing property into a land trust or shares into a cooperative. It will be up to $60,000 per household at or below an AMI level of 120%. And eligible grant uses are principal write-down, closing costs, PMI premiums, and down payment assistance, anything related to that acquisition. And then for track 2, the acquisition support, this is aimed at the cooperatives or land trusts themselves. So looking to permanently increase the number of permanently affordable units in their portfolio by supporting a CLT or a cooperative with acquisition of those units. We know that in the market today, it's a challenge both to buy a unit and to acquire new units. It's not an easy market for anyone. So this support will be up to $100,000 per unit of affordable housing, and 51% of the units must be priced and sold at rates affordable to households at 80% AMI or below. And the grant uses, again, are that acquisition, holding cost appraisals, gap financing, all related to acquisition. This is more clear in the RFP, but this is not a rehab grant. So that's something that is important to note for folks looking to administer these two tracks. This is sort of where the city is going, and the way that this grant is structured, this RFP, is we are looking for, these are sort of big picture, we're looking for someone to administer this program. So there could be a provider for both tracks. As you folks, you can apply for one or both, depending on your capability, interest, and applicability. For track 1, we're requiring that the administrator is a nonprofit. And track 2 for that acquisition support, that you are a CDFI. So there's some folks that fall into both of those. You can respond as you would like. There is $3.5 million total to be used. It will likely be $1.5 million for track 1 and $2 million for track 2, though the initial contracting could shift a bit. So that is not 100% set in stone, but that is the anticipated grant awards for each of those tracks. Something that is noteworthy for these bond proceeds. If you've used other funds from other kind of either federal agencies or from the city, these are structured a bit differently. So these are bond proceeds, which means that they must be tied to specific infrastructure support or addresses. So as a recipient of this grant, you may only bill for the purchase price grant or acquisition costs, whichever one you fall into, and then a fixed negotiated project delivery fee per unit. So that would encompass all of those other things that would go into the support of that acquisition or purchase price payable once that transaction occurs. And then for tracking and database management, DOH will select a database to be used in concert with the providers to ensure that we have good tracking across both and that we have good reportability for everyone. The timeline, which is in the RFP, but I wanted to reference here, we just released this RFP last week. The bidders conference is today, and RFP responses will not be due until Monday, January 8th. With the holidays, we know that this is a bit longer than usual timeline, so it gives you the chance if there are clarifying questions you need to ask or to put together a proposal. The things that we will be evaluating your proposals will be selected based on your organizational capacity and values, program design, your budget justification, and then any partnerships to your application. The hopeful timeline with contracting as we go through the city, the RFP will close in January. We will select a finalist in Q1 of next year. And by the end of Q1, that should be 2024. So sorry, the year has already changed. We hope to be done with negotiation and execution so that this program will run through 2024 through 2025. So I went through that pretty quickly, but I wanted to open the floor to any questions. I can go back to the details, or we can open it up to folks who have questions either about eligibility or the program or anything else that I can answer. Rachel.
Yeah, hi, good afternoon, Steph. Can you clarify, you said the money isn't for rehab?
Yes, so the money can be used for acquisition or that purchase price, but the pro forma should reflect that the city is not monitoring rehab, and it's not that a project for acquisition couldn't include it, but it will not be a part of the city support of the project.
So does that mean the presumption is there would have to be a layer of a loan to rehab a property?
It kind of depends on that specific acquisition, but if rehab was required, the city's funds would not be supporting that rehab work.
Okay, thank you.
No problem. David.
Hi, good afternoon. Thank you, Steph.
Mhm.
Related question. Can this fund be utilized for other soft costs associated with acquisition? There are planning fees or environmental study fees required, or is it just for purchase and acquisition incentive alone?
That's a good question. I believe many of the costs can be. There's just, as we go through the final contracting documents that we would be using, we just have to ensure with our law department that those are eligible bond fund usage. This is, to be honest, quite different than traditional funds that we've used. So we have to make sure, typically environmental costs would be appropriate, but we just want to make sure that that's appropriately tracked. It's not like a traditional admin line or something that the city's more typically used to financing or funding.
Thank you.
No problem. Michael.
Yeah, this is, we saw that the phase 3 implementation phase for the groups that got pre-development quote unquote funding and commitments from the city disappeared from the website and was replaced by this program emphasis. It was the thought that there was going to be a separate phase 3 for those supported groups who have community land trusts or co-ops that do not fit these definitions of acquisition and ownership housing. And I say that because we're involved in a community land trust that has multifamily rental housing and is innovative in terms of organizational development, which was funded and a centerpiece of the phase 2 funding under the business development category. Yeah. So the question is, what is there for groups that are not just about purchase, acquisition, and home ownership?
Certainly. So I don't want to answer on behalf of the mayor's office team, but I will say that this RFP is additive to those phase 3 implementation, however they choose to move forward with that, not in place of. This is not the exclusive phase 3 support for groups. This is like a separate additional funding that the Department of Housing had that we work in close coordination with the mayor's office, but I know that the entire ecosystem phase 3 rollout will be much larger than this.
Oh, so maybe that's reassuring, right?
Yeah, I don't want to speak to whatever they're doing for phase 3, and we can have some follow up. I think more specifically, my guess is the NECA team and the folks doing the phase 2 rollout from her team. Right. But this is my hope and guess is that they're just promoting this because it is directly in line with the work that they already are doing in community, and we are just one piece of kind of departmentally supporting this ecosystem work that's already happening.
Okay. All right. Thank you for that clarification. I just want to suggest that, we all in this field have biases toward acquisition and development and purchase kinds of strategies, and not so much on the side of preservation, which is a huge priority for the Department of Housing. So your advocacy to have an appropriate implementation phase that is from the DOH leadership to the others within the city would be appreciated.
Definitely. I think that we have a separate ask from you to follow up, but we can have a larger conversation because definitely heard. Great. Any other questions? Feel free to raise a hand, come off mute. James, do I see a hand?
Yeah. Can you hear me okay?
Yeah.
Okay. Good to see you.
Well,
So I'm new to this like setup in Chicago with the arrangement with the delegate agency that manages the funds and passes through grants on a competitive basis and sort of administers them. The 3.5 million, that does that include any funding that would need to be used to cover the operating costs for the administrator? And I know I'm guessing that's part of the application is, putting
Yeah.
together a budget that shows how you're competitive,
Correct.
but is there a limit or general sort of like rule of thumb that the city wants to see for the percentage of the program funds that are used to cover the staff and legal and other expenses that come with administering?
Certainly. So I'll answer specific to this, not all delegate agency contracts, because this is unusual. When I talked about the project delivery fee, that is that fee that all those other costs would be encompassing. So based on your structure for program and your organization structure, that could change a little differently. There's not a set percentage. And the reason that is because the bond proceeds have to be associated per project with specific infrastructure. So there's not an admin budget separate from the project delivery fee. That project delivery fee should encompass all expenses that would come with what it takes to deliver each project of that work. So we understand that that's a bit unusual, but it is how these are structured so that we can use these funds flexibly in this way.
And when we put together our budget, am I hearing correctly that you'd want to see us naming what that project delivery fee is per grant rather than like, okay.
Certainly. And there could be a reason why different projects may have a different fee associated, whether it's a percentage, whether it's a flat rate, whether it's like for, I imagine there's a pretty big difference between, for example, purchase price, flat fees, versus acquisition support or something like that, or different types of building, whatever.
Right.
Be creative. We understand that there's differences in that. We expect to see that in the proposals, but that is the difference between this and a traditional delegate agency contract where you put together a totally separate admin budget, rather than this more targeted approach.
Is there a upper bound that is tied to the source of funds, like 10% on, or some
No.
number? No? Okay.
Mm-mm.
Okay, cool. Thank you.
And then I saw another question from Michael in the chat, so I just want to make sure I read and respond to that.
I think I kind of covered it with my.
Okay, great, cool. Let me just scan through the things to see if anyone. David, did you raise your hand again? Am I seeing that right?
I did. As far as the sub-grantees and the clients, so to speak, what role will DOH be playing in partnering the program administrators or kind of the applicants with that respective realm of sub-grantees? I know many of us kind of have land trusts or co-ops with whom we're already working or thinking about working. Will DOH also be playing a role in asking respondents to look at specific sub-grantees?
Sure. So I imagine that as we build this ecosystem, there'll be, and as we build this program, since it's a new model of support to the city, that especially at the beginning, there will be some things to work out on how that pipeline and process will go based on who the selected recipients are. I will not say it will be dictated by the city. Certainly the reason we're selecting successful grantees is so that they can come through and run a program that is great. And that's why we're looking for respondents to do that. There will be a role that the city will play in setting up that program structure as we roll it out as well. And we know that just based on how this goes, there will be certainly an aspect of either marketing or information sharing that the city plays a role in, simply because that's where folks might come to about information. So that will be something we can work out with the grantees as well. It doesn't have to be one way or the other.
Thank you. And then one other quick question. Is there an expectation of leverage ratio for the funds in terms of total project costs or total development costs that the DOH has in mind?
There's no set ratio. If you want to propose something that makes sense based on what you're seeing in your potential clients or sub-grantees that you're seeing, happy to receive that.
Thanks.
And thank you, Pedro. I see that you dropped something in the chat. The description of phase 3 has changed as of this morning, and it no longer contains a link to this program. Lovely. So it seems like that feedback was heard by the folks in the wealth building team. See, I'm not seeing any other hands.
Actually,
Yeah.
while we're here,
Yeah.
building on David's question, maybe you kind of already answered this, but as part of a proposal, would it be appropriate to suggest a process by which the grantee would be selecting sub-grantees, such as a prioritization system, a scoring system?
Certainly.
Yeah.
There's in the questions for the RFP, you'll see there is sort of like the program proposal questions where it's like we are asking folks to lay out the ideal based on their expertise and knowledge. Ultimately, the city will go through, this contracting process with the selected grantees and finalists to finalize that both in contract form and then in program like manual form, so that everyone rolls out on that eventual date with the most successful program that can be. And we would love to hear your expertise.
And is it correct that the city would grant the funds up front and then the administrator would be able to, what the hell just did you see that?
A celebration, yeah.
How did I
Yes,
do that?
yes, words all around. Yeah, that was
Anyway,
my understanding. I believe that is how the contract would be set up, correct. It would, unlike something where the city is administering funds with like a contractor on a case-by-case basis.
right,
This
a
would be
reimbursement.
correct. Yeah.
So the speed of getting those sub-grants out to projects, to households seeking to purchase a home or a share would
Sure.
ultimately come down to the administrator. So there wouldn't be like a bottleneck with the city. Okay.
Yeah.
Awesome. Thank you.
We are hoping to alleviate bottlenecks and as much as possible get out of our own way to ensure that this gets to community. I think that's it from questions. Otherwise, I am here. Feel free to come off mute. The follow-ups that I'm going to do after this meeting is I'm going to post this recording as well as transcription of any questions that I receive via email. I haven't yet, but I will continue to do that up until the week before the grant, the RFP is due, along with any questions that were received today. So if you do end up having further questions, my email is here. Contact me, call me if you need. I will post all responses to every question that's asked of me to that link, so everyone will receive the same information for all questions. I will share the slides that'll also be on there. Let me see if I can drop the link directly to you folks real quick. This is here we go. That is where everything will live related to this, the video, the FAQs that anyone asked today, and these slides. Responses can be emailed for the RFP all in one as instructed in the RFP directly to me by January 8th. I do recommend doing it a day early. The apostrophe in my name is super annoying. So occasionally you'll get a bounce back, but it will work. It does work. It's a great email. And with that.
Steph, I think there's a couple more questions in the chat.
Oh, all right. Sorry, folks. Who do I have? Will you share the slides? Yes. Who else did I miss a question? I think I answered Michael's. And then I might be missing questions. Can someone let me know, flag, if there's something else that I am missing? Feel free to hop off from if there's a question that I didn't answer in here.
I think that there was a question regarding, can you amend this program with input? From Michael. Did you answer that? Michael, was that answer?
Well, I just put it out there last minute because obviously this has all been unveiled. I don't know if it's been vetted by advisors that you guys have, but you know, if you want constructive input then on how the program is structured, we would be glad to give it.
And then the other question is, we'll just share the slides from today as well.
Yes, they will be posted. And I think, David, you have a hand up.
I do. One more question as long as we're all talking.
Yeah.
In terms of the expectation about deployment of funds and full disbursement, can you go back to the timeline slide?
Yeah. There you go.
Thank you. Is the expectation by the end of calendar year 2025 that all projects receiving funds will be approved, or that all projects receiving funds will have completed acquisition and
I can double check with the legal team on that because I want to make sure I'm not answering out of bounds. But my understanding is that by the end of 2025, the project funds should be allocated. That the difference between whether they have to be spent or allocated, I guess, depends a little bit on the closing date of like an acquisition that might fall at the end of 2025. But typically our contracts would have possibility of extension written into them for that, because especially for funds like this, we want to ensure that just because there's a bit of a date strangeness on acquisition, we aren't hindering someone's ability to close on a property. I'll clarify though and get a final answer before I post it to make sure that I'm not misanswering with someone on the exact way that that contract would be written and the way that these funds are structured. Great. Well, if there's nothing else, I believe that's it for today. That was short and sweet, everyone.
Thank you.
Thank you all and have a lovely Thanksgiving.
Thank you.
thank you.
Thank you,
as well.
Steph.
Take care, y'all.
Bye.
Have a good holiday.
Same to you.